Hey folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway, Chief Market Strategist here. Today's date is Wednesday, June 15th, 2016. Well folks, the FOMC policy decision was made. Janet Yellen's press conference underway, basically concluded. Markets very little reaction. Basically exactly what we expected is what she said. She was very dovish, no interest rate hike here, basically saying that July's most likely off the table as well, which I think most of us figured out. You have Brexit coming up, you have obviously the weaker jobs data we've received lately, so that really puts it in a position where there's a good possibility we may not see an interest rate hike until December of this year after the elections, if that. And I wouldn't be surprised if it doesn't happen even into next year. So we'll see what happens. Markets are kind of, yes, they're happy about it, but they're not rallying sharply. You can see the spiders up about 75 cents since the announcement. You had a little pop, then a pullback. The reason why you're not getting the same rally from the markets is because people fear that the Fed missed their window. The Fed is behind the curve, which historically has been the case. So again, you're looking at the S&P 500 ETF, the SPY, and this is the 10-minute chart. So this is since the open this morning. Very much sideways choppiness. It looks like you do have a little bit of a bullish pattern, so it wouldn't shock me to see a little bit of short covering end of day, which pops this market up. But either way, the market I don't think has a ton of upside, more so because the market's very worried that the Fed has lost control, that the Fed now wishes they had raised rates earlier this year, in January and February, missed the window, and now they cannot do it. And now what happens when the market or the economy slides into a recession? They don't really have any downside to go. And what we're seeing is Japan is now, the 10-year there is negative in yield. The German yield has gone negative as well on the 10-year. This is very bad. You're not seeing a negative yield as having an impact in a positive way. So it's almost like a test in these other countries, and it's not a good thing. So all of these things could be down the road creating a scenario for another collapse, but in the short term, we're not at that point yet, and I want to stress that, folks. When, anyone can say, oh, in the next 100 years there's going to be another recession or there's going to be another market collapse. Well, obviously, right? But can you pick it to the day, even to the week, even to the month? If you could pick it, honestly, to the quarter, you're a rock star in this industry. And that's what we've done for a long time here at InTheMoneyStocks.com. We've just closed out huge amounts of winners. The track record by our third party will be updated soon, and you can check those out. But it has been a rock star recently, just absolutely rock star-ish. And again, markets looking like the bullish pattern should break out here. I actually have projections that could take us to the 200 by the end of the day. And again, just notice the pattern. From the low yesterday to the gap up today and to the highs right here, this is almost a straight shot up. And then the rest of the day, even with the Fed, you've chopped sideways. So to me, this is a bullish pattern that really looks like it could break to the upside into the end of the day. And it's not that, don't get me wrong, it's not that this is good news from the Fed. It's not that the market's going to rejoice. If this occurs and we see a push up, it's more so short covering. So think about a lot of shorts out there, thinking, oh, the market's going to collapse on the Fed. They all picked up shorts ahead of it. They're waiting patiently to see if it falls. It's not falling. By the end of the day, they're going to have to cover, and that creates a buy. Okay? So again, just be aware of that, folks. Very interesting price action. So that's what we have going on the S&P. Interesting that the S&P is holding up in the face of weaker oil today. Here's the USO. You can see we're just off of the lows. So again, it's actually a small positive that the market's holding up in spite of lower oil. Gold today really on a crazy move. That actually did have a bigger move off of the FOMC. We saw the GDX have a nice rally too, and you can see a big pop in the GDX. I think the GDX is tapped out, though. I think it's tapped out. I think you've had these pops. Look at these pops. So you've had these pops, and then it fades. So here was your recent high, and it collapsed. Here's a gap up. It collapsed. Here was a small move up. Collapsed. Now you're getting off of the Fed a big pop. I would wager this is probably near pullback range. So we'll keep a very close eye on this, but I am in the camp that the GDX has downside, more downside than upside to go. I think you have 15% downside on the GDX, maybe 5% to the upside or so as a maximum. Okay, so again, guys, keep an eye on the spiders end of day. That is my analysis, and you can see we're popping up here a little bit more now. And again, what I'm thinking is right around 3:30, that's when the buy program will come in, 3:30 p.m. It's about 3:23 now, so really you could start at any point here, and it probably squeezes. And it's not, again, I want to stress this, it's not because all of a sudden the market's viewing the news from the Fed in a bullish way. It's a short covering squeeze where a lot of traders do this. It's not a high percentage trade, but what they'll do is they'll be like, oh, this market's due to get crushed. So they short the market right ahead of the Fed. When it chops sideways like this, they're just waiting. By the end of the day, they need to cover that position. If it doesn't fall and it starts to push up, it's going to create a covering frenzy. And then you have, obviously, the pop that's automatically or just created artificially from that. All right, anyways, guys, bottom line is the money is being made hand over fist here. Yesterday, we closed out an 18% winner on Dust. We closed out multiple short trades yesterday, which was the right thing to do going into the Fed today. As you can see, that was the smart thing. We literally banked another 20+% on those trades, and now we are setting up for the next big move in the market. Come join us. Take the 7-day free trial to the Research Center. Talk to you soon.